While everyone's focused on stocks and real estate, the savviest investors are quietly pouring money into assets you'd never expect. Are you missing out? In the world of investing, the conventional wisdom is clear: stocks, bonds, and real estate. These are the pillars of most portfolios, the assets that financial advisors universally recommend. And for good reason, they offer liquidity, established markets, and a generally predictable path to growth. But what if the truly smart money, the investors who consistently outperform the market, aren't just playing by these rules? What if, while the masses are focused on traditional avenues, a select few are quietly accumulating immense wealth by pouring capital into assets you'd never expect? Assets that defy conventional categorization, offer unique risk-reward profiles, and often operate entirely outside the public eye. Today, we're going to pull back the curtain on these unconventional asset classes. We'll explore the hidden markets, the unique drivers of value, and the strategies employed by the savviest investors to generate outsized returns in areas most people overlook. This isn't about speculative fads. It's about understanding the underlying principles that make these assets attractive and how you might be missing out on some of the most exciting opportunities in modern finance. Prepare to expand your investment horizons. Let's discover where the smart money is truly flowing. Our first stop on this journey into the unconventional is fine art. For centuries, art has been a store of value, a symbol of status, and a passion for collectors. But in recent decades, it has increasingly become a recognized asset class, particularly for the ultra-wealthy. We're not talking about decorative pieces for your living room. We're talking about masterpieces by established artists, rare historical artifacts, and significant contemporary works that command millions, even hundreds of millions, at auction. Why art? Beyond its aesthetic appeal, fine art offers several compelling investment characteristics. It can be a hedge against inflation, as its value is not directly tied to traditional financial markets. It offers portfolio diversification, reducing overall risk. And for the truly rare and sought-after pieces, supply is inherently limited, driving up demand. The market is opaque, often illiquid, and requires deep expertise, which creates an information asymmetry that sophisticated investors can exploit. They leverage art advisors, auction house connections, and private sales to acquire pieces that appreciate significantly over time. For example, a painting bought for a few million can, decades later, sell for hundreds of millions, offering returns that dwarf traditional investments. It's a market driven by passion, prestige, and profound financial acumen. Closely related to fine art, but often more accessible, are rare collectibles. This category is vast and diverse, encompassing everything from rare stamps and coins to vintage sports memorabilia, first edition books, classic cars, and even highly sought-after comic books or trading cards. The key here is rarity, condition, provenance, the history of ownership, and cultural significance. Consider the market for vintage sports cards. A Mickey Mantle rookie card in pristine condition can fetch millions of dollars, far outperforming the stock market over certain periods. Why? Because the supply is fixed, demand from passionate collectors is high, and the cultural narrative surrounding these items continues to grow. The market for rare coins and stamps, while perhaps less glamorous, is equally robust, driven by numismatists and philatelists who view these items as both historical artifacts and tangible investments. These assets are often less correlated with traditional markets, offering a unique form of diversification. However, they require specialized knowledge to authenticate, grade, and value, making due diligence paramount. For those with a refined palate and a keen eye for investment, vintage wine and spirits have emerged as a surprisingly robust asset class. We're talking about specific vintages from renowned vineyards, rare whiskeys, or limited edition cognacs that appreciate significantly with age and scarcity. The Livex Fine Wine 1000 Index, for example, tracks the performance of the most traded fine wines and has consistently delivered strong returns, often outperforming equities. The investment thesis is simple. As these wines age, they become rarer and more desirable, especially if the vintage was exceptional. Demand from connoisseurs and investors outstrips supply, driving up prices. Storage is crucial, maintaining optimal temperature and humidity in specialized cellars. This market is less volatile than stocks, offers diversification, and has the added benefit of being a tangible asset that can be enjoyed or sold if the investment doesn't pan out as expected. It's a sophisticated market, often accessed through specialized funds or brokers, that blends passion with profit. Shifting from luxury to necessity, water rights and agricultural land are increasingly becoming a focus for smart money, particularly in an era of climate change and growing global population. As freshwater resources become scarcer and food demand rises, control over productive land and access to water becomes incredibly valuable. Investing in agricultural land, especially in regions with reliable water sources, offers a tangible asset that produces food, a fundamental human need. It can provide consistent income through crop yields or leases, and its value tends to be less correlated with economic cycles. Water rights, while complex and often regulated, represent an even more fundamental asset. In drought-prone regions, owning the rights to extract and use water can be immensely profitable, whether for agriculture, industry, or even for sale to municipalities. Billionaires like Bill Gates have reportedly invested heavily in farmland, recognizing its long-term strategic importance. This is a long-term play, driven by demographic trends and environmental realities, offering both financial returns and a hedge against future resource scarcity. Our fifth unconventional asset class is intellectual property, IP, and royalties. This is the ownership of intangible creations of the mind, patents, trademarks, copyrights, trade secrets that can generate recurring income streams through licensing. While not a new concept, the scale and diversity of IP investment have grown significantly. Think about music royalties. Investors can now buy fractional ownership in song catalogs, earning a share of the income generated every time a song is streamed, played on the radio, or used in a commercial. Similarly, pharmaceutical patents, software licenses, and even unique algorithms can be incredibly valuable. Once the IP is created and protected, the cost of replication is often minimal, and the income stream can be passive and long-lasting. This asset class offers high margins and diversification, as its value is tied to innovation and market demand for specific creations rather than broader economic cycles. It's a market for those who understand the power of ideas and the legal frameworks that protect them. Finally, let's venture into the newest frontier of unconventional assets. Digital assets, specifically those beyond mainstream cryptocurrencies like Bitcoin and Ethereum. We're talking about non-fungible tokens, NFTs, virtual land in the metaverse, in-game assets, and other forms of digital scarcity. While highly speculative and volatile, these assets have attracted significant smart money investment. NFTs, for example, represent unique digital ownership of art, music, or collectibles, secured on a blockchain. While many are fads, some believe they represent a fundamental shift in how we define and transfer ownership in the digital realm. Virtual land in platforms like Decentraland or The Sandbox has been bought for millions, with investors betting on the future growth of the metaverse economy. In-game assets like rare skins or weapons in popular video games can also be traded for real money. The investment thesis here is often tied to network effects, community building, and the potential for these digital worlds to become significant economic platforms. It's a high-risk, high-reward space that requires a deep understanding of blockchain technology, digital culture, and the ability to identify nascent trends before they go mainstream. So, while the traditional investment world continues to focus on familiar territory, the smart money is quietly diversifying into a fascinating array of unconventional asset classes. From the timeless value of fine art and rare collectibles to the strategic importance of water rights, the recurring income of intellectual property, and the speculative potential of digital assets. These are the frontiers where true innovation and outsized returns are being found. This isn't about abandoning traditional investments. It's about expanding your perspective, understanding the unique drivers of value in these niche markets, and recognizing that wealth can be built in ways that defy conventional wisdom. The world of finance is constantly evolving, and for those with the foresight and courage to look beyond the obvious, the opportunities are immense. Are you ready to explore the hidden corners of the investment world